A very good late afternoon and thanks for joining us. I'm Holly and you're watching 𝐊𝐶 TV live from Sydney. This is the last show of the day, the last trade. And there's no better way to wind down the day with today's market close commentary. In today's show, we'll be looking at the overall ASX 200 performance for the day and also exploring the gainers and losers. Then we'll check out two IPOs which made a debut today as well. After that, we'll zero in on shares that grabbed the limelight today, like Iress, Fortescue Metals, CIMIC, Swift Media, Decimal, Air New Zealand, and much, much more. Right before taking a peek at the Asian markets and the crypto world. So let's get down to it. Well, the Australian share market closed sharply lower today as a sharp reversal in iron ore prices hammered the share price of mining heavyweights like BHP, Rio Tinto, and Fortescue. Only adding to the woes, the fall in gold prices also weighed on resource companies. The consistent rise in COVID-19 cases and subdued cues from global peers also dented market sentiment. The benchmark index ASX 200 ended 0.76% lower, led by materials and energy stocks. Earlier today, the index opened lower and declined as much as 1%, crossing below its 50-day moving average. Overall, the ASX 200 ended the week on a flat note as gains in energy and A-rate stocks were offset by losses in materials and consumer staple companies. On the sectoral front, 6 of 11 sectors ended in the negative terrain. The materials sector was the worst performer, with a 4.3% loss owing to a sharp fall in iron ore prices. Then in the overnight trades, iron ore extended its fall, sliding by a further 8.1%. Analysts from UBS have cut their price forecast for iron ore and now expect the commodity to fall below $100 a ton before the end of the year instead of 2022. Materials was followed by the energy sector, which fell 1.3% owing to a fall in crude oil prices. The prices remained under pressure as an easing threat of storms in the US exerted pressure on the prices. Among others, utilities, financials, consumer staples, and A-rate also witnessed a surge in selling activities. Although bucking the trend, IT emerged as the top performer with a 2% gain, tracking firm cues from Wall Street. Healthcare, consumer discretionary, and industrial sectors also ended marginally lower today. Let's have a look now at the top gainers and losers of the day, and the top laggard on the ASX pack was iron miner Fortescue Metals, which plunged a staggering 11.3%. Some of the other worst performers were financial software business Iress, coal miner Whitehaven Coal, mineral resources, and gold miner St. Barbara. Meanwhile, online retailer Redbubble topped the gainers chart by rising 6.5%. Some of the other notable gainers were corporate bookmaker PointsBet Holdings, childcare operator G8 Education Limited, property business Ingenia Communities Group, and real estate investment trust Shopping Centres Australasia. Well, with that said, let's shift our lens to the stocks that grabbed investor attention today. New listings 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 and SSH Group made strong debuts on the ASX today. The Israeli-based small-cap fintech company 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 surged an amazing 62% in the opening deals. The Israeli tech firm raised $7 million by issuing 35 million shares via its IPO. The shares were issued at an offer price of 20 cents apiece, and the company helps in reclaiming many types of value-added tax. Meanwhile, safety, security, staffing, and equipment solutions provider SSH Group also rallied over 30% post-listing. The company has raised $6.25 million at 20 cents a share in its IPO. They provide safety and people services to the construction, mining, civil, and government markets across Western Australia. And engineering and construction group CIMIC dropped over 2% even after its joint venture secured a contract worth $265 million. The company informed its shareholders this morning that the group company CBP contractors, along with its joint venture partner Acciona, has been selected to deliver the Western Sydney's airside civil and pavement works. This will be the third project awarded by Western Sydney Airport to the joint venture following the earlier award of 2 earthworks packages. Construction will take 2 years, while the airport is due to open in the late year 2026. And shares of financial software business Iress tumbled as much as 11% after the EQT fund management withdrew a takeover bid. Last month, EQT had proposed a non-binding takeover offer to acquire all of Iress's shares via a scheme of arrangement. Although both parties failed to agree on a transaction, resulting in the termination of the deal. Iress reaffirmed its guidance for a constant currency segment profit between $164 million and $168 million in the financial year 21, and it flagged its non-operating costs related to the transaction worth between $4 and $5 million pre-tax. The company proposed to commence its on-market share buyback, as previously announced in July this year. And shares of Swift Media surged over 9% after it appointed Brian Mangano as its new Chief Executive Officer. Mangano will replace Pippa Leary, who will transition to a non-executive director role. Mangano is currently Executive Director and CFO of the company, and Swift is a specialist tech company delivering network infrastructure, premium entertainment and communications solutions nationally. Meanwhile, the share price of engineering group Decimal was up 1% after it bagged a contract from the Victorian government. The company has been awarded an $88.7 million contract for the Barwon Heads Road project, the scope of which includes the construction of a new 2-lane carriageway, reconstruction, realignment, rehabilitation, and upgrade of the existing carriageway and intersections. The project will commence immediately and is expected to be finalised in the year 2023. While the share price of Minbo's Resources fell nearly 7% even after Moody raised its region. Angola's credit rating. The global agency upgraded the rating of the exploration and development company for the first time based on improved governance and debt metrics. Moody cited stronger governance, in particular the quality of Angola's executive and legislative institutions, as indicated in various aspects of their credit profile. SaaS provider IntelliHR plunged over 10% despite raising funds. The company said in an exchange filing that it has completed an $11.5 million placement at 23 cents a share. The offer received a strong response from several Australian leading offshore investors, and additionally, another $1.5 million in placements was issued by the company's joint lead managers. The funds raised will be used for the expansion of IntelliHR's global integrations and referral partnership channels. It will also be utilised to accelerate growth in domestic and global customer business development. Next up, shares of Air New Zealand ended marginally higher, pairing early losses after it issued an update on the impact of lockdowns in its business. The lockdown restrictions in New Zealand are costing the company between $45 million and $55 million a month. Adding to it, the ongoing suspension of New Zealand to Australia travel has resulted in a revenue loss of 20 million New Zealand dollars to 25 million a month. That being said, the cargo flights are continuing with approximately 50 flights per week, and the company is observing strong demand for air travel across regions in New Zealand that are currently under Level 2 restrictions. Last month, the airline had suspended earnings guidance due to uncertainty associated with the introduction of a nationwide lockdown and the suspension of the Trans-Tasman quarantine-free travel. And Australian department store chain Myer continued a gaining streak for the second day after posting robust annual earnings. The stock was up over 2% after surging as much as 15% in the previous session. The high street retailer's net profit after tax stood at $50.7 million for the financial year 21, as the company swung back to profit despite ongoing business disruptions caused by lockdowns, thanks to strong growth in online sales. And meanwhile, shares of Wesfarmers also extended gains for the second day after it proposed a revised bid to acquire Australian pharmaceutical industries. In the revised proposal, Wesfarmers proposes to acquire 100% of the shares of API for cash considerations of $1.55 per share. That is a 35.4% premium to the closing price of $1.145 a share on the 9th of July. The API board has urged shareholders to consider the revised indicative proposal and allow Wesfarmers to undertake confirmatory due diligence. Well, with that, it's time for a short break, but stay tuned because I'll be right back with more on the other side. Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV. Welcome back, I'm Holly and you're watching The Last Trade. Moving on to the next segment now, let's have a look east towards the Asian market performance. Well, shares in the Asia Pacific region were trading on a mixed note, tracking muted cues from Wall Street. While the markets in China and Indonesia fell, Japan and Hong Kong edged higher. The Nikkei 225 index in Japan was the best performer in the regional market, with a 0.5% gain. It was trading near record highs last seen in 1990, amid optimism over a fresh stimulus from the new Prime Minister. Japan's Nikkei was followed by Taiwan's weighted index, which was trading 0.4% higher, and in a similar trend, Hong Kong's Hang Seng rose 0.4%, while South Korea's Kospi gained 0.2% as well. In mainland China, the Shanghai Composite fell nearly 0.7%, while the Shenzhen Component tumbled over 1%. Meanwhile, Thailand's SCT Composite dropped over 0.6%, while Indonesia's Jakarta Composite slipped 0.2%, and the Straits Times in Singapore dropped as well 0.1%. Moving on now, and Wall Street ended on a mixed note overnight as a fall in energy and tech stocks offset cheer over a strong retail sales, which signaled the resilience of the economic recovery. The Dow Jones dropped 0.2%, the S&P 500 dipped 0.15%, while the Nasdaq Composite rose 0.1% as well. US retail sales rose 0.7% last month, while weekly jobs claims fell during the week ending September 11. The Labor Department data showed that US labor market pressure remained under pressure as the US initial unemployment claims increased to 332,000 in the week ending September 11, compared to just 312,000 during the prior week. Now for a look at the crypto market performance, well, the major cryptocurrencies were trading in the red today amid anti-government protests in El Salvador against the adoption of Bitcoin as legal tender. Last week, President Nayib Bukele announced the Central American nation had officially adopted Bitcoin as its legal currency alongside the US dollar. According to a Reuters report, the country's Court of Accounts, which oversees its public resources, will investigate a complaint about the government's Bitcoin purchases and the construction of kiosks for cryptocurrency ATMs. Reacting to the news, the price of Bitcoin, the world's largest crypto by market cap, dropped 0.5% to just $48,000. The most popular currency rallied over 3% on Thursday after American largest movie chain theater AMC Entertainment Holdings announced the adoption of Bitcoin for online ticket and concession payments. The company's CEO, Adam Aron, said in a tweet that the AMC theaters will accept cryptocurrency by the year's end in 2021. And Ether, the world's second largest crypto, was down over 2% to just over $3,560, reversing previous session gains. The coin had surged over 3% in the last 7 days, Meanwhile, the price of Cardano, the third largest crypto by market cap, slipped over 2%, and Dogecoin rose 1.8%. Other virtual currencies like Tether, Binance Coin, Litecoin, and XRP, as well as Stellar, Solana, and Uniswap, were also trading in the red. Well, on that note, that is just about all for today. We hope this has provided you with some insight into the market performance globally. Join us again on Monday as we continue to provide you with the market news and insights from across the globe. Holly Shields signing off.